Thank you very much, sir, for giving a very good idea of how accounting teachers must make their students so perfect and suitable to the society. Thank you very much, sir. And as you said, ethical behavior is very much necessary in all the fields, whether it is stock market or accounting field or any type of organization you take, the ethical behavior is very much necessary. And today's topic being the settlement issues and the trading of securities. When we look at the stock markets, we have witnessed a lot of changes in the stock market in the last 2 decades, especially the technology that really, it brought sea changes in the trading and also the settlement. And as I was discussing with Dr. Durga Prasad Garu, he said, with the present trend of settlement and the trading cycles, there is no issue at all. But how it evolved is a big issue. So that is what he is going to focus on. Meanwhile, I would like to just tell you a few things about what is happening now in the settlement and trading. What are the various issues? Earlier, it was something like T plus 10 days. So T means transaction and plus 10 days where the settlement would take place. That is all investors who want to buy, who want to sell the securities, they have to wait so long, and anything can happen in these 10 days. And globally, we were not competent because 10 days time is too long. And slowly we have come to the global standards, and thanks to SEBI. The earlier session we have seen Krishna questioning very furiously about 54,000 scam after SEBI. But still I say, if SEBI is not there, this 54,000 would have become 10 times, or 5 more zeros would have been added. So definitely SEBI is doing its best, and as a regulator, of course, its hands are tied up to some extent, we agree, but still without that it could have been a disaster in the country. And our capital markets and stock markets are on par with the global markets now, very competitive. It is because the fast way of settling the issues, and also the way we are communicating among all the necessary players in the stock markets, all this is very good, and that is why we are able to withstand along with all the global markets. That point we have to agree upon. And coming to the various changes that have occurred, of course Durga Prasad Garu will tell about the old system of crying out, where you could have witnessed Sakshi Malik versus somebody's wrestling match, or it could have been Pogot versus somebody where a leg is broken. All such things could have happened on the bourses. But now, thanks to the new systems and new technology, all such things have gone out. So it's only screen based trading which is now. If you want to buy anything or if you want to sell any security, what you have to do is simply approach your broker, and through the brokers you'll have to buy or sell the securities. And as far as the mechanism is concerned, remember, it is something like, it looks very easy, because there is a clearing house which takes care of the clearance. That is, once the stock exchanges record the transactions, which are called as a trading, and then the trading is intimated to the clearing house, and clearing house in turn will intimate this to the clearing banks and also depositories for the pay-in of funds and also pay-in of securities. And once these instructions are carried forward, and then there comes the day of settlement, where the securities are handed over or paid out and funds are paid out, and there comes the settlement. So this process looks very easy, but what are all the issues that are connected with this? You'll have to understand. So mainly the players, what is their capital adequacy? That is to be taken care. So that is why SEBI and the government of India, they have put so many controls and so many checks that any frauds should not happen in the settlement or the clearance of securities. So one such thing is capital adequacy of the players. So everywhere capital adequacy is to be ensured, and thereby to some extent a kind of confidence will be instilled in the traders and also in the investors. And one more thing is dematerialization. So this dematerialization is nothing but now there is no need of holding your securities in physical form, but you'll have to have them in the dematerialized form. So there is a custodian or a depository which will take care of your dematerialized securities. So even that particular issue, it made very easy for the investors to think about the investment in the securities. And the reduction in time cycle for the settlement. So then, as I said, it was T plus 10, T plus 7, T plus 5. Now it is T plus 1. That means transaction and just 1 day. And your trade is settled. So that is, it's very interesting, isn't it? So in all these things, there is a role of technology. So what is this technology? Especially the online trading and also online settlements that have really helped out. Remember, with this kind of online introduction, then it was 1 error in 1,000 transactions, but now it is 1 error in lakhs of transactions. So that is how in clearance or in settlement, there is no issue of fraud or anything. However, still there are risks with the system. So these risks, I hope if possible you will take up. It is something like replacement cost risk, or maybe the principal risk, or maybe the liquidity risk, credit risk, and counterparty risk, system risk. So especially all the people who are involved with this trading and settlement, they'll have to take care of all these risks. So there should be a risk management procedure, and all checks and balances must be there. And that is the reason why there are a lot of surveillance, and this surveillance is systems online. So online surveillance and investigating teams and inspections are being conducted, and it's a routine matter as such. And therefore it is necessary that margins are fixed, and those players who are running into these various kinds of transactions and dealing with the transactions, they'll have to maintain the margins, and all these are very much necessary, and these are must. Therefore by ensuring all such risk management mechanisms, definitely the clearance and trading of securities has become a very easy task as such. And I would like to share one example where how even with in spite of so much of checks and balances, how an error can occur. Very recently, that is yesterday itself, I was talking to one of my friends who invested a lot in securities, and he was as I was telling, I thought there's no errors at all with the system now, online, and everything is technology maintained. But he was telling that his account was flooded with many securities. So it is a bountiful of securities which have entered into his account. So it was something, an error, maybe the system error, or maybe there is the person handling the accounting, the numbers. If a number is typed wrongly, then automatically the others' accounts will be credited. Of course, there are checks. Even if there is a wrong credit or a wrong debit, even those things can be reversed. But we should go to such a type of system where such kind of mistakes or errors should not happen. So with these few words, I would like to invite our Durga Prasad sir, who would be the key speaker for the session, to give his views.